Hello and welcome to Stock Value Tips. Today we are looking at Clorox, a well-known consumer staples company focused on cleaning, household, and lifestyle products. Clorox owns several strong and recognizable brands, including Clorox Bleach, Pine Sol, Kingsford Charcoal, Burt's Bees, and Glad. These are everyday products that households continue to use regardless of the economic cycle. The reason we are looking at Clorox today is that the stock has faced significant pressure in recent years, and its share price has declined from previous highs. For some investors, this recent weakness could raise an important question. Has Clorox become an interesting long-term opportunity, or are the challenges more structural in nature? In this video, we will break down what Clorox does, the key risks the company is facing, and whether the current valuation offers an attractive risk-reward profile for long-term investors. Before discussing future risks, it's important to understand what went wrong at Clorox after 2020 and why the stock price declined so significantly. One of the biggest issues was the cyberattack in 2023. Weak IT security and flawed authentication systems led to a major systems outage, disrupting operations, slowing production, and causing significant financial damage. Another major problem was the ERP transformation. The implementation was underestimated, leading to operational inefficiencies, lost sales, and a temporary loss of market share. Clorox also struggled with post-COVID demand normalization. During the pandemic, demand for cleaning products surged, but the company failed to adjust quickly enough when demand returned to more normal levels. This resulted in higher inventories and increased pressure on margins. Finally, broader macroeconomic pressures such as tariffs, intense competition, and changing consumer behavior further weighed on revenue growth. Together, these operational missteps and external pressures explain much of the stock's decline and set the stage for the challenges Clorox is facing today. Even after the recent recovery efforts, Clorox still faces several important risks that investors should not ignore. One of the key risks is margin recovery. While management aims to rebuild profitability, higher input costs and promotional pressure could limit how quickly margins return to historical levels. Another concern is elevated debt and interest expenses. Compared to its historical profile, Clorox is currently more leveraged, making it more sensitive to interest rates and refinancing conditions. Competition from private label brands remains a structural risk. In an environment of pressured consumer budgets, shoppers may increasingly trade down to cheaper alternatives, especially in household staples. Pricing power is therefore not unlimited. While Clorox owns strong brands, repeated price increases could eventually hurt volumes and market share. There is also execution risk. Following the cyber attack and ERP issues, operational stability and IT resilience remain critical areas to watch. Finally, Clorox is exposed to regulatory risks and volatility in commodity costs, such as chemicals, packaging, and logistics, which could further pressure earnings. Together, these risks highlight why Clorox is not a risk-free investment and why execution over the next few years will be crucial. Despite the risks we discussed, Clorox also presents several compelling opportunities today. One of the most important factors is valuation. Clorox currently trades at historically low price-to-earnings multiples, levels that have not been seen in nearly 13 years. From a value perspective, this significantly improves the risk-reward profile for long-term investors. Another major attraction is the dividend. With a dividend yield of approximately 4.9%, Clorox offers an unusually high and attractive income level for a consumer staples company. Importantly, profitability metrics are showing clear signs of recovery. Return on invested capital and net income margin have both returned to pre-COVID levels, signaling that the company has moved past the worst operational challenges. As systems stabilize and execution improves, Clorox has the potential to benefit from operating leverage and margin normalization. Taken together, these factors suggest that Clorox may represent a rare value opportunity in the consumer staples sector, offering income, recovery potential, and long-term brand strength at a valuation not seen in over a decade. Over the past 10 years, Clorox has delivered a modest annualized return of 0.6% when accounting for dividends reinvested. The stock currently trades at a P/E ratio of 15.8, and with a beta of 0.57, its volatility is relatively low compared to the broader market. From an enterprise value perspective, the EV to EBITDA ratio is 11.1, while net debt sits at 1.8 times EBITDA, indicating the company's debt is comfortably manageable. Clorox has historically demonstrated strong capital efficiency, with a trailing 12-month ROIC of 24.4%, although recent years have seen some temporary weakness. Price to free cash flow is 19.3, reflecting the company's ability to generate cash from its operations. Profitability metrics are solid, with a net income margin of 11.68% and a gross margin of 44.28%, slightly below comparable consumer staples peers like Procter & Gamble. Overall, these metrics show that Clorox remains a financially sound company, with stable margins and solid cash flow generation, despite the recent operational challenges. Clorox currently offers a dividend of $4.92, with a payout ratio of 76.11%. Importantly, the company has paid a dividend continuously since 1968 and increased it for 48 consecutive years, qualifying it as both a Dividend Aristocrat and Dividend Champion. Even with the recent operational challenges, Clorox has managed to maintain its dividend without increasing debt, highlighting the resilience of its business model. When combined with solid profitability, stable margins, and strong cash flow generation, Clorox represents a rare value opportunity in the consumer staples space, with a historically attractive dividend yield for long-term investors. Thank you for watching our deep dive into Clorox. We'd love to hear from you. Who here owns Clorox today? Share your thoughts in the comments below. Remember, this video is not an investment recommendation, but simply an educational overview. If you enjoyed the video, don't forget to give it a like and subscribe for more company analyses and stock insights.